So I'd like to welcome everyone to today's episode of the Minds and Money 5 at 5. As I said just earlier, we've been running this since the 2nd of April and it's been quite a successful, engaged episode and series that we've been running. Obviously, also thanks to the Melbourne Mining Club, who's been a serious supporter for the entire series as well. On top of these episodes that we run both in Australia, in Europe, as well as North America, we also have been running a number of online conferences where industry's been able to connect both the miners and the investors, and some of those have been very successful in producing some great relationships and also some really great commercial partnerships as well. The next big event is the Minds and Money Global event, which is I believe, a 48-hour event. Which will run over all the different continents, and we'll run, I don't know who's going to be awake or who's going to be asleep at that particular event, but I think we've already got 40 or so companies signed up for that and a number of investors from the global audience. So do look out for that event, which we will send you information about after this. We'll also be sending you an email with today's presentations, as well as a recording of today as well, so you can watch it or share it with friends if they've missed the episode. I won't kick off too much, but you're all on mute at the moment. But after each presentation or each speaker, please do shout out to us in the group chat, or otherwise, poke me, and I will be able to unmute you and you'll be able to ask questions to any one of our speakers, of which obviously today we've got a stellar cast as well. Without further ado, I'm going to pass over to our host for today, Peter Taylor from NWR Communications. Thanks, Peter.
Thanks, Shireen, and welcome to everybody, guests and participants here today, and everybody who's logged on from all around the world. We've got Canadians and Nigerians here that I can see, Victorians, Western Australians, and quite a lot of people. So it's great to see everybody interested and joining in. The theme today is gold, of course. Gold has been on the burst, as one of our sporting commentators would say. It's trading at US dollars 1,874 right now. Silver's running hard behind, and I think every second person in Australia who's in lockdown is either punting on the races or the gold market. So it's provided a lot of excitement, and some of the companies that we have here today are right in the thick of those things. We have, kicking off will be Andrew Shearer, who is currently a technical director at a corporate broking firm, Pack Partners. He's also an non-executive director of Resolution Minerals, Andromeda Metals, Investigator Resources, and Okapi Resources. So he's a long history in both the geology side of the business, but also in the corporate broking side. We'll bring his views to that. We'll be talking today with Mr. Andrew Tunks from Meteoric Resources, Peter Cook, the Executive Chairman of Westgold Resources, Debbie Fullarton, the Group Chief Executive Officer of Westgold Resources, and looks like we're finishing up with Adam Schofield out in the bush, who's CEO of Nelson Resources. So looking forward to hearing everybody's updates today on what they're doing, and I think we'll start off talking to Andrew about the gold market and what's happening now. So Andrew, in my notes here, I've written gold in capital letters. It's trading at 1874. Tell us what's going on in terms of the trends you're seeing in the market from the investor point of view right now.
Look, thanks, Pete. As we've spoken about before, look, it's just super bullish. We haven't seen this sort of desire for gold in a number of years. It's just phenomenal at the moment. And there's certainly a lot of different trends that we're seeing, a lot of key themes that we've seen over the last few months. Certainly the gold price moving beyond expectations. I know there were certain punters out there that were saying it was going to be $2,000. Now, I'm hearing $3,000 is the new aspirational target, and people are just happy to take the risk on and seeing little downside at the moment. So we're just, as I said, look, super bullish, seeing a lot of desire to get into stocks. And I think the big thing that's interesting for me is that we've moved from, at the start of the cycle when gold started to move, we've moved from the producers, and we had a couple of little hiccups there, but it's just punched straight down that desires come straight down into the micro cap land. And it's not just the the punters that are playing down there. It's the funds and the large institutions that you would never normally expect to see in a sub 50 mil stock are now showing a lot of interest.
So, Andrew, those big stocks, the producers where the institutional money flows and the superannuation money flows, are they sort of now looking fully priced? Have they got $2,000 priced into their share prices now? And that's why we're seeing money looking into the mid-tier and down into the junior end?
Yeah, look, whether they are fully priced or not, I think the perception is there that there is the limited growth, and that's why people are chasing the growth opportunities further down the tree. And it's not just gold as well; it's across the commodity market. We're certainly seeing it moving into copper now, into nickel, and iron ore. Less ways to play it in the micro end of town, but certainly interest there as well on that side.
So, from my point of view, in the investor relations and media side, I'm seeing a tremendous amount of news flow in coming from the juniors. There seems to be a lot of exploration news, lots of capital raisings. Every second ASX story now is about a new discovery, some drilling programs, or some grassroots exploration going on. What's happening there with all the news, and what's driving it?
Yeah, look, and that's probably another key theme as well. One thing to have commodity prices moving up and supporting the general interest. It's the successes that we've seen recently as well. So you've got PMI, you've got De Grey going from 20 mil to $1 billion, you've got Musgraves, you've got Staveley, Alkane, Legend, Chalice. Some really, really, really good stories that have driven a lot of value and a lot of growth, and that's driving people's appetites as well. And you're right, the money being raised is going back in the ground and delivering that news flow. And so hopefully we get to see this continue for quite a while as people are on the ground and putting the drill bit in as well.
When I was in the broking days, the last big gold boom, I remember back, it would have been in the 90s, I think it was, triggered by the Gawler-Creighton discoveries. There was every taxi driver was touting stocks, and mums and dads. Now my sister's calling me up asking for tips. So this is the first time for many, many years that we've seen that sort of cycle. And the prices are driving capital raisings are driving explorations bring results, which is driving news. In a healthy gold environment, it really seems to be a golden time that a lot of brokers and explorers have been waiting for. So,
look, I think when your taxi driver starts giving you stock tips is probably when you ring the bell for the top of the market. But I think at this time round, we're seeing that confidence just continue further. And interestingly, if we had Headley on here, we'd probably have somewhere in the time clock where we are, whether it's in the M&A sector or in the capital raising sector. But we're seeing certainly a lot of M&A activity really started to crop up. And the one that's getting interesting now is, the sector has been adverse to IPOs for a long time, and there's a few coming through in the wings, but they were generally underway or partially completed beforehand. But the confidence has started to get there now where I'm hearing of IPOs, people putting them together. And don't forget, an IPO takes 6 months from the day you hit the button to the day you hit the markets, hit the boards generally. So that's really saying that the brokers and the investment community has enough confidence that this will be here through to next March.
So probably just to wrap up our discussion here, where to from here for the industry? What are we looking for in the M&A space? What should the investor be looking for if he's looking for targets in the merger and acquisition area?
Oh, look, certainly undervalued opportunities out there that haven't been able to attract that capital for one reason, that can bring a new story, a new management team to the table and then unlock that value. So you're certainly looking for some stories like that would probably be one of my targets there, or where there's synergies to grow bigger and as well. So I think we'll see more M&A going forward as well.
And I think this is not a short-term thing. The gold price is definitely on a strong trend towards 2,000, given the global economic situation. I don't think there's much standing in its way. We know that gold being produced around the world is coming in at lower grades. There are not a lot of big new mines being discovered, so the pressure is on the price to move upwards. So we are in a healthy environment, and our speakers here today will be leading that charge. So I think we might move across now, and thanks, Andrew, for those comments. We'll probably come back with any questions. Sharina, have we got some questions there that we want to throw to Andrew?
Not at this stage, no.
All right, we might come back a bit later. Obviously, we covered that pretty comprehensively. We'll take across to Tunksy, who looks like he's out in the desert, but there's just a beautiful backdrop. Can you give us a bit of an update on where you are with Meteoric Resources, your Palm Springs and Brazilian projects, and tell us where you are now and where you look to be taking it?
Absolutely, Peter, thank you very much. So we've been exploring in Brazil for around a year now, a project that we picked up from Crusader Resources, and I'm not going to really talk about it today, but we did have some spectacular success there last year. 25 metres at 95, I think, was probably the best hole that we drilled last year. So we had some spectacular resources, but with the COVID situation and because we had some money in the bank, we decided to spread our political and geological risk, and we've picked up a project in Australia, and that's really what I'd like to talk about today. So if I can just flick over, thank you, Shireen. And again, that's the standard disclaimer. So look, we're really excited to have picked up the Palm Springs Gold Project. It's in the Kimberley region of Western Australia. And it was a mine way back in the 90s. In fact, I did my PhD about 600 kilometres to the east at the Tanami Gold Mine, and Halls Creek is where I used to go for a break. And if you go to Halls Creek for a break, you know that the Tanami is pretty bad. So, and at that time, this mine was operating, and that was in the early 90s, mid 90s. So it was a small mine, and it shut down purely because of gold price. It produced about 50,000 ounces at around 2 grams, but they were producing at an all-in sustaining cost of $540, and the gold price dropped below 500 in 97. And the mine shut. And I'll show you now why we're pretty excited about the project, but it's a large land holding, about 120 square kilometres, and it's been sitting in private hands for the last 20 years. And this is a cross section. So for those of you who are not familiar, this is looking in beneath the ground at the side of the earth, okay? So trees on the ground, and those blue traces that you can see are drill holes. Now, when we reviewed this project, and in fact, I reviewed it about a year ago when I was looking at the Brazilian project, we couldn't progress it because there's no digital data. And we opted for Brazil, and we've had a lot of success there, but I kept in my mind coming back to this one and being intrigued by it. And so when we decided to look for an Australian project this year, we decided we were going to bite the bullet and capture the paper data ourselves. So this is a classic. This is a paper section from 1995, and you can see, and you probably can't see on your small screen, but there's pencil drawing all over it. And so I've just outlined some things that are why we're excited. So the next slide will show you, this is the plan pit from 1995, and the next thing, thank you, will just show. And so these are the modelled gold ore bodies at that time. You can see at that price, there was still a whole bunch of gold left in the bottom of the pit. And so that was what they planned. But by 1997, here's the reality of what happened. If I can have the next slide. They only mined down about 35 metres. And at this southern end of the ore body, they only touched the top of the ore body. The ore body, in fact, plunges to the south, which would be out of your screen towards you. That means as we go south, the ore body continually gets deeper. So all those gold sections there are unmined. Now, if I can go to the next slide, and again, you won't see a lot of detail here, but these are big, robust drill intercepts. The ore bodies are 35 metres wide. We're not even sure of true thickness. We don't have a lot of information about geology, about the structure. We believe it's a bit like Bendigo, in that it's in the hinge of an anticline. So we have a volcanic unit, and right in the hinge is where all the mineralisation occurs. but we think that there will be other folds, synclines, anticlines, structures going through. There's been a lot of drilling here, but there's no resource. All the drilling was destroyed when the mine was shut down. There's no QA/QC. We don't have any digital data. So we're going to have to go back and essentially rediscover this. But this is a great head start. Our plan is that the dozer will go to site in early August. There's a lot of cleanup to do to get us access for drilling, and we'll be drilling by mid-August, early August, mid-August. One RC rig to start and a diamond rig to follow. We're very confident that there's some fantastic intercepts to come here. We're very confident that as we grow our own drilling, we'll be able to incorporate some of the historical drilling as we confirm it. So that will be a huge head start for us. We're going to chase it both beneath the pit and to the south. There's other resources on the tenements that we've picked up. And I mean, it's a great time on the back of what Andrew Shearer was talking about before. Northern Star's first ever resource was on the ground that we've picked up here. Northern Star, it's a 30,000 ounce resource about 5 kilometres away from the mine. Northern Star had a market cap at that time of $10 million. It's now 10 billion. From little things, big things grow. We think that we're onto a great start here. We're very confident of our ability to drill some great intercepts, and we're drilling at Shearer. So by August, September, we'll have results from 2 projects coming in at the same time, and what a market to deliver them in. We're very excited and can't wait to update you all. Thank you.
Thanks, Tunksy. And I think that points out what we did talk about in the intro, that with the high gold price, some of these shell projects, which were locked away because they weren't valuable enough to develop, are now starting to look economical. And here's one that you've about to rediscover, if you like. And any previous owners didn't bother because I guess the gold price wasn't supporting it. So it looks pretty good from here.
Yeah, it was in private hands for the last 20 years, and they were underfunded, and they had other things to do. The guy who had it is a Greenland expert, and he's been focused on a big project in Greenland, and this was his second-tier project. So perfect for us. Yeah,
so Meteoric by name, and hopefully for your share price, Meteoric by nature. So
yeah, thank you very much, Pete.
Loving that one. Okay, so thanks, Andrew Tunks from Meteoric Resources. Now we're going to move across to talk to Mr. Peter Cook.
Sorry, we do have 1 or 2 questions for Andrew. One is actually from Andrew Shearer. Andrew, do you want to ask your question to Andrew?
Yeah, Andrew, any mills close by? Like, is this something that you're looking to stand alone, or is this a...
Pantoro operate the Nicholson's deposit, which is about 40 kilometres away. At the time that Butcher's Creek was mined, ore came from, so at that time, Precious Metals Australia held both deposits, and ore from Nicholson's came to the plant at Butcher's Creek. So it's sort of the opposite. Now the mill's at Nicholson's, and there's no mill at Butcher's Creek. So yes, that is 40 kilometres by pretty good roads, and certainly is something that, you know, we would like to talk to Pantoro about, but we've got to get in and do some work before we worry about that and show that this is a real thing.
And then we had one question actually from our friend from Nigeria asking, do you have the geological data before the drilling data?
We do have the geological data. It's just not in a digital format. So we have all those sections. It's just like doing geology back in 1986 when I started. They're on paper and pen, and we measure them off with our rulers, scale rulers, and it's been fantastic for me. I've had a ball. I'm not the world's most computer literate guy, and I've really enjoyed it. So I'm happy, and we will recapture that data in digital format. But at the moment, we are simply working through the good old-fashioned way, and it's a joy.
Thank you, Andrew.
Okay, no further questions for Andrew at this stage, but they can, if they send them through, we can forward them on afterwards. Next up, we're going to move across to Peter Cook, Chairman of Westgold Resources, and Peter hates giving these sort of presentations. He stumbles across his words, but I'm sure he'll pull something together for us here today. Peter, can you give us a rundown on the billion-dollar company that you're currently looking after, and as of today, 1.1 billion at $2.46 a share, and the Big Bell mine producing pretty well, and you're all cashed up, I read this afternoon.
Yes. Yeah, look, thanks very much. First of all, really before I start, I just want to say congratulations to the junior end. I'm a big follower of the junior end of our market, and it's been a drought for many years. It's great to see money flowing back to that end. It is the breeding ground, the future of mining in Australia. Discoveries in the junior end take a long time to gestate. There's been lots of work going on in the background when the market's been unfunded, a lot of great scientific work. It's great to see the exploration into the Australian market starting to get some money. Australia is one of the most fertile grounds for gold in the world, and we've got the best explorers. And some of those are now coming home. They're forced to come home. So glad to see the money flowing to that end, and glad to see that some of the scientists in our industry are starting to apply some of their trade pretty much to their exploration activities. Andrew, I was also glad to hear that you started in 1986, which made me feel so old. Anyway, I just want to tell you about Westgold, because we're at the other end of that spectrum. So Westgold, as it stands today, is the seventh largest domestic gold producer in Australia. We've been a purely West Australian gold producer, and in more recent years, we've focused all our effort on the Murchison. Our Murchison goldfield's like a jigsaw with 4 pieces of it. We own 21. We're slowly acquiring the remainder. And 4 years ago, all these mines were the victims of previous and they were closed. Westgold, and funding mainly from its own internally generated cash flow, has restarted all these projects. It's now built 3 operations. It's produced more than 750,000 ounces of gold in the last 3 years. And it essentially controls the central Murchison region. You've got to pinch yourself to put together a region like the whole of the central Murchison, which has produced 10 million ounces historically, and now has a 9 million ounce resource sitting within it. It really sits upon a 20 million ounce mining camp. And we got 3 mining hubs in this area, essentially one in the north, one in the middle, and one in the south. And they're all resurrected projects. The Fullarton gold operations in the north sits in different stratigraphy. It sits in the Neo-Proterozoic, or younger rocks for those who are non-scientific, about 1,600 million year old rocks in the Briar Basin. Up here, the ground mine and a number of open pits and a number of stockpiles, and we feed a modest sized plant, a 100,000 tonne per annum plant, and produce between 60 and 70,000 ounces of gold. A very nice project and our strongest cash generator. In the old bellwether project of the Central Murchison, Meteoric, we run the Bluebird plant. 3 or 4 owners in the last 25 years. It's probably had its biggest birthday in its whole 25 years. In the last 4 years, we've invested heavily in here, and we've taken this project, which has predominantly been an open pit mining project, back into its history of underground mining. The Meteoric, we have a 1.6 million tonne per annum plant called Bluebird, and it produces steadily sort of between 100 and 120,000 ounces of gold. And then 100k south of there, in the area we control around Kew, essentially the Big Bell, Fingal, mines which are steeped in Australia's gold mining. A series of mines in there producing around 100 to 110,000 ounces of gold. Resource base in the group of over 9 ounces, reserve base of 2.6 million ounces. 10-year mine plans in all 3 of these projects. So we're really at the end of the exploration side. In terms of the company itself, as was introduced, it's more than $1 billion market company. It's a company that, proud of such a heavy development phase, $500 million investment. We're now completely debt free. and we closed the year with more than $137 million of cash in the bank. I suppose makes us the envy of the explorers in the 5 at 5, but in a very strong position. And, you know, we do own 350 titles and more than 1,200 square kilometres of mining tenure in that Central Murchison area. Company's in, it's about 65% institutionally owned. Our major shareholders, the typical of those as you would expect to see in a company of our size. We do hedge a little bit of gold, which has been linked to the amount of capital we've invested in these projects, although that is reducing fairly rapidly. And in terms of price, probably one of the strongest hedge books in Australia. I see Sasha Keane on the list in there. I say g'day, Sasha, and he'll probably attest to that at 2062, it's one of the better hedge books in the Australian gold sector. Westgold's also very unique in the sector. We're unique for a couple of reasons. We're unique because we're owner-operator in everything we do. We don't rely on contractors. We do all our own underground mining through our internal mining services division and all our own open pit mining. So, you know, we're also unique because we're the only gold company in Australia that's actually got a female CEO. And with that, I want to introduce Deborah Fullarton, the CEO of Westgold, who newly appointed, who had been our CFO for a number of years previously and with a long history in the resource sector. So, you know, Deb is a driving force behind the company. I'll just let her present the last couple of slides. The last slide.
Good afternoon, everyone. I thought I'd just take you through our 2021 production guidance that we released to the market a couple of days ago. As you can see from the, there's a build-up quarter on quarter in our ounces. This is linked to our development at Big Bell moving forward into production. And you'll see the cash cost of sales trending with a decrease. That's obviously as we produce more ounces, our fixed costs are pretty static, so you get a reduced cost per ounce. And the all-in sustaining costs are higher in the first couple of quarters as we finish off the development at in Big Bell. So it's weighted towards growth in the first half. That we should see our ounces improve in the second half and hopefully meet our guidance. And for our international listeners, we've given you the rates in US dollars, and just you can see those comparatives.
We've got a few questions here, but I'm going to, one from the audience, I'm going to kick off this one. Given the current gold price and the outlook, given your comfortable cash situation and the future secured of production and revenue, do you see yourselves now as a growth company in the M&A space, or is there sufficient exploration territory within your tenement package to grow the business?
That's not a question that we haven't been asked before. You know,
yep.
Having only 25 to 27% of our resource space in reserves at this point in time, and the majority of that sitting underground mines, is obviously a lot of organic growth in the company. And in particular, so I look back through the last 4 years of production, you know, Westgold's managed to replace its depletion from mining each year, or better than replace its depletion from mining in each year. So to look at an ore reserve of a company like Westgold with so many deposits, in fact, in terms of deposits, we've got 90 separate ore resources in our pooled aggregated area in the Murchison, as having a reserve that amortises to zero is a very narrow-minded way of looking at the company. So a massive amount of organic growth within the company. That said, we're on a regional play. You know, we put together the aggregation of all these historic mining centres, you know, over a 4-year period, you know, 11 historic mining centres. And only 15, 20 years ago, every one of these would have had its own separate process plant on them, which had since closed with the cycles in the gold market and have now reopened with it's essentially a mining processing hub scenario where we have a processing hub in the north one in the middle and one in the south. And we have already in place a 10-year mine plan within our ore reserves of 2.6 million ounces to produce, approximately 270 to 300,000 ounces a year for the next 10 years. So there's a lot of growth sitting in that. That said, the regional play is really like the jigsaw I talked about. For us, it's a regional control play. It's a long-term view. There are parts to that jigsaw we don't own, and we intend to own those, but there's no hurry to own those. So, we're certainly in those, and our own tenure itself has got, strong exploration potential for additional resources, including the most obvious, which are extensions to the mines that we already own. And I think, just if I can just add one last point, that's a key reason why Westgold's in the Murchison, not in the Eastern Goldfields. It's not in the Kalgoorlie region. I'd had 20 years playing around in the Eastern Goldfields, and the thing about the Murchison Goldfields is that the average depth of the mines we're now operating is 450 vertical metres. The average depth of our peer group mines in the Eastern Goldfields is 1,000 metres. And each one of these mines typically mines 50 vertical metres per annum. So Westgold itself has 10 years of mining until it achieves the average depth of our peer groups, which leaves us in a very strong position in terms of sustainable long-term output. Fortunately, we've got the timing right. Heavy capital investment, now passing the tipping point of that massive capital investment, moving into free cash flow generation phase at a time when the gold price is significantly risen. So that holds us in very good shape.
Peter, we've got 3 questions here for you, Peter Cook. One is from Christine Coonan. Christine, do you want to ask a question to Peter?
Yeah, I just want one comment and a question. Peter, it's great that you've now got $1 billion company, and also I'm delighted that you have a female CEO. My other question is, now with the increase in gold prices, do you think Australia might mine more refractory ore and produce gold concentrate?
Well, certainly we don't have too much refractory ore, Christine, but, I do think the dynamics of Australia going down the road of pressure oxidation and bioxidation in terms of producing gold concentrates and then trying to do those on site will eventually see the economics of transporting gold-rich concentrates to other markets in the world that have already got that capital infrastructure in place, rather than burden their shareholders with that option again. And I can already see that happening with companies like Blackham, even the De Grey discovery. There's a hidden word in there called oxidation, which is pressure oxidation, which is a very complex process. But the international buyers of concentrate are now far more competitive than they've ever been for buying gold concentrates, and I do think that'll happen.
We have a question from Mac.
Oh, hi. Sorry, John Ogden at Eastern Valley. So my computer calls itself Mac. I've never changed it. Sorry about that. Anyway, nice to meet you, Debbie and Peter in person. A couple of things for you. One is I just wondered about your guidance, which seems conservative because you're going to get 100,000 ounces hopefully from Big Bell, and you've just done 235. So I just wondered if you're either being very conservative or you're taking some other lower grade sources offline. So why you came up with that number? And then the second thing, which may be hard to answer, but I just wonder why you just don't seem to get a break from the market. The analysts are kind of always, really don't get behind you, and you're not really covered by many people, whereas other stocks have become darlings. So I just wonder, any thoughts on the dynamics of
a couple of great questions there, Mac. I suppose I'll answer the second one first, which should leave me time to forget the first one. We've been one of the renovators of the industry. So essentially in the Australian gold sector, there's been 4 companies rebuilding projects or restarting old projects, and we've been the biggest of those. There's also been a group of companies that have, I suppose, instantaneously benefited from a higher gold price and that have been steady state producers. So our peer group in the redevelopment stage have been Gascoyne and Blackham and Dacian, and we've sort of been the biggest of that lot. And, you know, the Australian market, as cynical as it does get on these things, it says, well, we'll buy it when we see it. You know, and we've been about a very large redevelopment of a region, not just an individual project. And, you know, I think we've just passed that tipping point, and you've started to see that recovery in the gold stock really in the last 12 months. You know, we're probably up 200% in the last 12 months, but still dramatically lagging on most of the market metrics, as you point out, compared to our peers. You know, I suppose the nearest producer like us had been in the market had been Saracen, which was probably 18 months to 2 years ahead of us in that evolution phase from development through to production, with their Thunderbox mine coming on and the developments of their other mines. And, you know, timing is everything in the gold sector. The gold price goes up, everyone wants to jump in. You know, it's a long game for the producer. You know, I think the thing that sets Westgold apart is, you know, the length of its reserve base. You know, the conversion ability of its resource into reserve over time. You know, I can sit here and put my hand on the heart and say we're looking at a regional control with 20-year projects. You know, we've been getting set over the last 4 years for the period that we're entering. Now, I've forgotten your first question, but it was a very good question.
We might move on then, if that's okay, Peter. Taylor and Peter Cook.
No worries. Thanks very much, Peter, and thanks, Debbie, as well. We'll catch up with you some other questions down the track. We're going to move on now out into the middle of the desert with CEO of Nelson Resources, which was also heavily supported by Peter Cook at its IPO and onwards. And Adam Schofield is out in the desert, and he's got something special for us, I hope.
Hi, Andrew, and thank you, everybody. Thank you, Mines and Money and NWR. We're out on our project in the Albany Fraser called Woodline. It's 830 square kilometres of ground. It used to be Seaford Newmont ground. It's a little bit cold out here. If it sounds like I'm shivering, it's because I am. We are currently sitting in the northeastern part of our tenement. It's a project called Socrates, which we have drilled fairly recently. We have some fairly high density drilling, which we intend to continue developing, and as we work towards a resource. The total project, as I say, is made up of 830 square kilometres of ground. We are at the junction of the Albany Fraser Origin and the Yilgarn Craton. That effectively sits about 20 kilometres to my right as I'm sitting here. We're currently planning a large geophysics program leading into a drilling program that was originally scheduled for next quarter, but with the work that we're starting currently, we expect to be drilling before the end of this quarter. The Socrates project, which is just north of me, has about 10,000 metres of drilling in it. And we have some fairly spectacular results in that. The best result that I talk about is 192 metres at about half a gram. That's 300 metres north of our large drilling pattern that we currently have. And is obviously a project we intend to take through to resource in the near future. To the south, on the boundary of the Yilgarn Craton and the Albany Fraser, we have three projects, Grindall-Redmill-Harvey. They sit on a large 20-kilometre gold anomaly. And we have a number of intersects in that show us that we have gold in bedrock. The geophysics program we are about to do will hone in on drill targets that we have already identified, but hopefully will give us some structural control. And we are really looking for a Tropicana out here on that particular fault zone. We are at the boundary of three fault zones. They're all very influential in Australia from a gold resource perspective. And we think we have the potential to really deliver a very large resource out here. and are obviously working towards that now. We've got a drone up in the air. We thought we'd try something different and maybe flick to some aerial footage of the project, and that's been done at the moment. And I think you probably have a live feed in with some aerial footage, and we're currently sitting directly below the drone. I'll give you a little wave there, and we're going to do a little pan around. I won't go into too much more detail, but what you're looking at is a very undeveloped part of the country.
Just quickly, Adam, I would say if everyone wants to put the speaker view on, you can actually see this in full screen. Sorry, keep going, Adam.
Yeah, no problem. Yeah, we effectively have about 30 meters of cover to bedrock. That is very similar to Tropicana, which is 250 kilometers northeast of here. Very lightly wooded, and it gets incredibly cold out here, and I've just had a rather cold gust of air hit me. But yeah, there really is nothing. There isn't a cell phone tower for about 80 kilometers from where I'm sitting. So we're running on probably NBN's biggest success, which is satellite. Yeah, it's a beautiful part of the country, but we're obviously here looking for large gold resources, and Tropicana has really proven that you can find them in this part of the world. To the northeast of us, FMG has a very large ground package that's actually quite close to where we're sitting now. And we have IGO and Legend and many other companies with tenure in the regional area. So it's a very interesting part of the country. Other than gold, we also have some nickel anomalism on the tenement. So we have base metal opportunities and obviously gold. But as I say, we are working our way towards a resource on the project we're on today. And then we are looking for a really large project on sort of Tropicana scale. So yeah, I think that's pretty much the presentation. So I hope people get an idea of what part of the world we're in. The wind is blowing. We've got a lot of dust out here, so maybe take some questions, Shireen.
And look, it's really good pictures out there. It looks like a great country, and as you said, lightly wooded. Woodline's the name of the project, the greater project out there. Newmont spent upwards of $14 million when they began exploring that. How are you going to distill that data to find targets within the exploration work that they did?
A lot has changed since Super Newmont owned the project. Last in 2012 with Super, Newmont had been out of it for 2 years at that point. The GSWA did a large seismic survey through the Albany-Fraser, or the northern foreland of the Albany-Fraser origin. That really has delineated the structural setting that we're in. And utilizing the data that Super Newmont have, we've really correlated that with the structural understanding that we now have. Super Newmont did not have that. That has given us a massive advantage. Additional to that, obviously on the Socrates project, we've put quite a lot of drill meters in ourselves. We do have some diamonds core that we acquired through MRG, and we haven't really had a good look at that as yet, but it is across the Kundalini fault, which we're obviously going to reassess with the knowledge that we now have.
Obviously, I've seen the presentation a few times and have seen some of the potential targets there, which may be several Tropicana types. Where do you start? When do you start drilling, and how do you choose those targets to start with?
Yeah, so what we've done is just work off the existing success Super Newmont had. So we've identified a number of holes with reasonable intersects in them. We could automatically go and drill out from those existing targets, but we believe geophysics really is the guiding tool with this. We need more structural understanding, and we think we will get that. We'll have that geophysics finished before the end of the quarter, and as I say, the intention is to have a drill rig turning around the end of this quarter.
So there's a question there from Peter Cook to you, Adam. I can read it here if you like. Great stuff, Adam. If everyone can understand the amount of scientific work you have put into targeting and understand the potential of this deep-seated structure in the Earth's crust, they will understand how much potential you have for a major gold discovery. When will you start drilling?
Before end of quarter, Quickie. We have approximately 4,500 meters planned. The magnetics program that we are now kicking off, and it will commence in the next 2 weeks, is an ultra high resolution ground mag program. It's across 8 square kilometers and 2 targets. That'll be followed up with our first passive seismic program to map the cover. We're expected to see a very delineated target zone. The drilling that SEPA and Newmont did lacked appropriate orientation. We think we can rectify that with this geophysics, and obviously that'll guide the drill rigs.
Thanks, Adam. And we have a question from Mac once again. Can you
hi, yeah. So it's John Ogden at Eastern Valley in Hong Kong. Beg your pardon. Adam, great to hear your story. I just wondered, state of balance sheet. I don't think you have much money at the moment. I just wonder how you're going to fund the drilling. You probably need like maybe 3 million. So will that involve a sort of very dilutive rights issue or placement? I don't know if you can tell us about the money raising.
That's one of our best kept secrets. Obviously, we completed a capital raising 2 weeks ago. It was a rights issue. We raised 2.2 million after costs. So we do have money in the bank. We have done a lot of work and obviously acquired a lot of data. So a lot of the expenditure that you might expect for what we're about to do has actually been covered. And we are fairly well equipped from a technology perspective in that we own a lot of our equipment, so we're able to operate a lot more cost effectively than many other juniors. So $2 million actually takes us quite a long way. We're expecting to see some results in the next round of work, and if those results deliver as expected, then we may look to do a raising at some point in the future.
Great.
Okay, so Shireen, have you any other questions there from our audience?
No, not at this point. Obviously, just a lot of comments about the coolness of the drone and being able to see the presentation.
I've got a question here for Tunksy, I think. Brazil looks like it might be one of the hotspots, so that project's probably going to be. How do you handle putting that on the shelf for a while, Peter, or what are your plans for your Arena gold project?
No, we're not putting it on the shelf at all. We delayed drilling earlier this year because, as everyone knows, Brazil has been a real COVID hotspot. And so we did have some issues about getting back to work. We're in the Amazon. We are very remote, and I had some concerns about some indigenous communities that are not close, but are not too far away. So we took everyone to a staging camp about 100 kilometres from work, and we staged there for 14 days and made sure everyone was safe before we went out. So we've been drilling, I think, for about 5 weeks now, maybe 4 weeks, and we'll continue to drill for it. Well, we're 1,000 metres into a 5,000 metre program. Only diamond. We're running a reduced crew, just one rig, and we're drilling we've been drilling at Donna Maria, which is a super high grade gold. It's got a small resource of 200,000 ounces at 15 grams. So we're trying to grow that and improve some of the categories from inferred to indicated. And at the same time, geologically we believe that this is what geologists would call a low to intermediate sulfidation epithermal deposit. Now, what does that mean? It means that they're deposits that form quite shallow in the crust, and they're often related to a bigger, deeper heat source. And we actually believe that we can see that's porphyry copper. There's been porphyry coppers discovered in the belt this year, and so we're following up. Some of our drilling is actually focusing on the porphyry copper results as well. So no, we wouldn't say it's a secondary project. We'll be drilling on both for almost the remainder of the year.
Yeah, probably my wrong choice of words there. I probably meant just how you're managing the current situation with Brazil racing up the case.
We're lucky. I've got two guys in Brazil who both did their PhDs at UWA in geology. And I met them through another company, but they've got fantastic English. They're fantastic geos. And so really, and I'm not a micromanager. I'm a big scale guy. So they get on with the job and they do a very good job. And I'm very confident in their ability to deliver exploration results. So that's working well for us.
And just one more question. How are you finding response from the broker and investor community to Meteoric? Are you finding good broker engagement? Are the institutionals coming in at your current market cap around 45 mil? Are there any institutions still looking at you at this level yet?
No, probably not. We raised some money late last year and we had a little bit of institutional involvement, but not much. We are very much a retail stock. We have a big retail following. We trade. We've got 1.2 billion shares. We trade really well. So you can get in and out of the stock and look, based on some success at Jurina and at Butchers Creek, I think that institutions will look at us. But at the moment, we have very little institute. We've got a couple, but they don't have significant holdings.
So the opportunity is there for them. And I'll just direct that same question across to Debbie. At the larger level where you are with Westgold, are you finding international institutional interest in you, or is it still just mainly the locals following you? Because $1 billion puts you up on the radar.
We're definitely on the radar, yeah. You can see from the shareholding composition on the slides, we've definitely got national interests. So.
I think, Pete, it's also worth differentiating between institutions as well. I'm seeing a lot more activity from the generalist institutions as opposed to the specialist resource institutions, which are certainly active, but a lot of the generalist institutions are becoming very active in the space as well.
Including the ETFs as well.
Well, it's interesting. We've got 990 odd resources companies in the Australian market, and there's only a very small amount of resource-focused ones. One of our guests tonight, Dave Ransom, was sitting on one of the leading small cap resource investor groups, the Acorn group. I hope this rise in the gold price and the stimulation of the Australian mining industry might stimulate a few more of the funds, and especially the super funds, having a look more closely at one of the biggest, if not the biggest industry that we have in Australia, and starting to spread some of the love. It's crazy that we have several thousand managed funds in Australia, and I think it's over $2 trillion in superannuation money now, which really does not trickle down below the top ASX, I don't know, 300 or so. And there's a lot of areas where people in Australia, I think, should be able to have some exposure to this great industry. Don't
forget, Pete, that Acorn just established the microcap fund as well.
Yes, I know.
So
that's good. Yeah,
some of these funds are actually pivoting themselves to come down into the outside the 300.
Yep, and we need to see more of that, and hopefully we will. Shireen, have you got any more questions lined up there for our guests?
No, I think we might wrap it up now, Peter. And if there's any other questions, we're going to link our speakers up with the audience anyway in a follow-up email.
Terrific. Well, then I'd like to say thank you for everybody attending. Thank you for everybody dialing in from around the world. And thanks for our guests for their time today. And information will be available from this 5 at 5 on those companies, or you can connect to me and I'll provide as much as I can as well. And I wish you all a lovely evening.
Thank you very much, Peter, for hosting. Nick Hughes is a colleague of mine from the Mines and Money team, and he wanted to point out something about some of these projects. Nick?
I was just going to say good evening, everyone. I'll let everyone get going in a sec, but thank you very much for joining us today. Thanks to Cookie and Andrew in particular. They will be joining us along with Simon Mitchell, who I'm looking at there from Southern Gold, at our Mines and Money Online Connect Global Conference, which we're doing 1st to 3rd of September, that Shireen sort of alluded to beforehand. There'll be some info coming out on that on the email as well. But we're really looking forward to that. And so, yeah, whether you're an investor, whether you're a mining company, jump on board, because doing it this way is kind of the way we're doing it for a while longer yet, Peter. So whether we like it or not, unfortunately, we'll have to have a virtual beer.
No worries.
Excellent. Thank you again to Peter Taylor, Peter Cook, Debbie Fullarton, Andrew Tunks, Adam Schofield, obviously there, and Andrew Shearer, obviously from Pack Partners, for your time and effort as well. And thank you to all of our listeners, especially those that engage with us for questions and also turning on your videos. We had some people from Switzerland. We've obviously got some people from China on as well, Nigeria, Canada. Rizal, I think it's Rizal, it might be time to hit the hay there in Toronto. Simon Curran is from France calling in, and we've got some people from the UK. So thank you to everyone, and good evening, or otherwise good morning to some. Thank you.
Thank you.
Thank you and good night.
Melbourne as well, Cookie.